Dear subscribers, as you know, we shared many information for you, and we are studying very hard to find current news for you. However, I cannot use this channel for future. Please follow our new channel called as Daily News Report and watch our video to support us. Link in description. Also, you can reach the video we shared on Daily News Report by clicking on the top right button. We highly recommend watching, subscribing, and sharing. We will continue to share some news on this channel, but we take precautions against some situations for future. Thank you for supporting us.
Really the closest to the spigot when it comes to understanding global economics, even if they're not out on the front lines telling everyone and leveling with people on how unsustainable things are. But
Yep.
give us your thoughts on this. I mean, what does this symbolize that central banks are buying gold?
Well, I think gold tends to be a safe haven currency in times of volatility. We've certainly seen a lot of volatility in the markets, especially during the last 6 months with the global pandemic. And so there's been, I think, a rush to gold for safety. But I think with all the other economic factors in the markets that have created volatility, we're certainly seeing more investors taking gold as their safe haven currency.
Absolutely. And, let's talk a little bit about this year. I mean, what has happened specifically this year in gold that has sent gold from, $1,500 to where it is now?
I think it's an accumulation of what's been going on the last couple of years with governments and printing money and uncertainty in economies that the bubble's been coming for a while. The fundamentals, when you listen to all the people that follow gold as a profession, have certainly been speaking to this bubble certainly going to break, and there's going to be a breakout in gold. And you look at where we were in 2018, we were around $1,250 an ounce. And each quarter it seems to be going up, and to have broached the $2,000 mark finally, I think has opened people up to more potential upside down the road because fundamentals of many economies are broken.
Absolutely. And, many people, they see gold as a commodity, but they forget sometimes that there's businesses behind gold that are producing, that have to actually work and earn money and operate. And so, give us some boots on the ground experience on what this year, the 2020 year, was like for Gran Colombia, going through the pandemic, the illness, kind of on both the economic front, like, what you've seen in terms of investor demand, but also, what was it like having to deal with it?
Yeah, it's I think oftentimes, not very well understood in terms of what operating managers need to go through on the ground when something like a pandemic hits. So it's a real knock to the business. You suddenly find yourselves in a different universe. The rules of engagement are very different. What you have to do to, in our case in the pandemic, protect workers, make sure that they can come and go safely. Putting in extra measures cost money in order to be able to keep the workers safe and put in all those protocols. The testing, the sanitation, even a company like ours that in Segovia, for instance, got through that very quickly. It only took us about 3 weeks to adapt, with putting in our business plan to, put in the right things, but still every day, every month, our managers continuing to have to adapt to this ever-changing risk and worry about, COVID-19 and what is it going to mean. It's not an easy universe for people to operate in. So in normal times, business is tough. This has really been a tough period. But our people on the ground have done a fabulous job keeping the operations going. And for us, especially when gold's roaring, above $1,900 an ounce, we're printing money ourselves because we've got a very solid cost structure. And so even with the extra bit of cost we've incurred, we're still making some significant margins. So the fact they could keep the business going and we can take advantage of this in our cash flow has been, a real game changer for our results this year.
Well, that's interesting. And, one thing I'll point towards is, as we were talking about before the interview here, is Warren Buffett's move into gold. And I'd like to get your beliefs on that? And, what does this symbolize in terms of what is happening in 2020 and gold, and, where to find value?
Well, I think, investors go where the profits are going to be made and where the flow of funds seems to move. I mean, for a while we saw it, everybody sort of jumping onto crypto as the new thing. When that faded, suddenly getting into the marijuana business, as that opened up in markets, it became the new sort of fad. But gold's always been a typical market for people to go into in areas, times of volatility. Certainly when you start to see generalists moving into a sector, like coming into gold now, they're going to be selective about what kind of companies they buy. But when they start moving in, it's a sense that there's profits to be made.
Well, and on the same vein as Warren Buffett, Berkshire Hathaway, buying a company like Barrick Gold, what are money managers, what type of companies will money managers be buying when they want to expose themselves to the upside in gold and silver? Can you kind of go over that a little bit with us?
Yeah, I think it's going to come down to buying quality. A company like Barrick and even Newmont, there's a reason these kinds of companies are at the top of the industry. But when you start to work down into the mid-tier, they're going to look for companies with good, stable operations, solid upside in cash flows, which means that, they've got, very predictable cost bases, good management that controls cost. They're going to be looking at leverage to the gold price. And what does that mean for free cash flow? And as the gold producers that are paying dividends, what does that mean to the generalist investor who's now going to get, a monthly or quarterly return on their money at the same time as they get capital appreciation? So I think they're going to look for quality, and it's going to be like any other investment. What's your return and how do you get it?
Well, Mike, I want to ask you a little bit more about the company.
Yep.
Let's go here. You guys produce 200,000 ounces of gold per year with roughly a $2,000 gold price. Talk about the margins that the company is seeing, and how significant is that? In terms of like when investors are trying to look for value. I mean, what kind of numbers are we seeing?
Yeah, no, we are very leveraged when gold starts to come up to upside in our cash flows and our profits. So, at $2,000 gold, we produce gold at an all-in sustaining cost basis at roughly $1,000 an ounce. So that means we're generating over, $200 million a year of all-in sustaining margin. Think of it as, free cash flow before tax. On an after-tax basis, we'll be generating, over $100 million a year of free cash flow. That allows us to do things like what we've done recently, which is announce our first ever quarterly dividend that's going to start up at the end of September. So now we can take some of those cash profits that we're making and we can start sharing that with our investors. And if things stay at this level, share price is appreciating, a company like ours can then look in the future to raising that dividend. But at the same point, I think our share price still languishes versus the peers at these prices. So you've got capital appreciation in share price coming as well as people start to understand the drivers behind the value creation we have in front of us.
So I'd like to go there if we can. I mean,
Sure.
When it comes to comparables, what sort of metrics do companies like yours trade at, and where are you guys at now, and what sort of comparables are out there that you would point us towards?
Yeah, well, we saw a recent quote from Frank Holmes, a U.S. Global, who'd said that out of 75 gold producers that they track, we were number one in a number of metrics, such as free cash flow yield. We were, by their measure, 16% free cash flow yield. The median of the group was 2.5%, and yet we're only trading at 3 times cash flow, where that same peer set's trading at 13 times cash flow. If you look at Red Cloud Securities, just their analyst released their report on us a couple of weeks ago now, following our Q2 results. We're trading at 1.8 times, enterprise value to EBITDA for 2021. They see the peer set that they follow for us at 5 times. This is consistent. We go across the board. When you look at various metrics, we're a bargain, and that will, I think, close over time.
Yeah. Well, I'm really thinking this interview is going to be very timely for people. When we release it, people are going to be able to see, when we put this out and, the opportunity in front of it. So I'm actually really anticipating that and think that we're at a good time to be doing this interview. So, Mike, talk to us about the position that Gran Colombia holds in Caldas Gold and also Gold X mining. It's in a sense, it's becoming, Gran Colombia is like holding a gold ETF, if you will, with the operations that it does and then the positions it has in other companies. Tell us about this a little more.
Yeah, it's sort of the evolution of the company. I mean, from its origin 10 years ago, we were focused solely on the Segovia assets, which by themselves, they're a company maker, they're high grade, area of gold. But over time, we added to that portfolio. Caldas Gold is the Marmato project that we've spun out to a new publicly listed company. It is now trading on the Toronto Stock Venture Exchange under the symbol CGC. It's a spin-off to create and build Colombia's next major gold mine. We own about 57% of it at the moment. We get no valuation for this project inside Gran Colombia, and now we own more than half of a project with a market cap over $200 million. So that's $100 million of value to our shareholders, which I would, venture is still not fully reflected in our share price. And this is a company that's recently completed several financings over the last couple of months that have raised about 240 million US. And with that, we're going to go out and build this mine, this very large-scale mine that by 2024 will be producing about 180 to 200,000 ounces a year of gold, also with very good margins in its project. And then Gold X was a company that we saw some value in a couple of years ago. It's in Guyana, on the Guyana side of the shield. Our guys have had tremendous experience there on the Venezuelan side, building some mines in the past, and saw value in the Toro Peru project. So we took a 20% position to have a look. Over time, that has become a very valuable position to us. We've more than doubled our investment so far. We currently have about $55 million of value between our shares and warrants in the company. And we see an opportunity, especially now that we raise the profile of a synergistic opportunity between Gold X and potentially the Guyana Goldfields mine at Aurora that Zijin Mining outbid us for in May. So there is an opportunity there for Gold X to move forward quite quickly on something that will be value creating for them and come back into our portfolio as well.
Mike, if you would, give us an idea of who owns the company, strategic shareholders and partnerships, and why that is significant for investors to be aware of.
Well, the founders of the company, Serafino Iacono and his partners and management, have just under 10% of the company, and that's always key. Serafino believes in putting his own money in behind the companies he starts, and that's not just in the shares, but also in the gold notes of Gran Colombia, where he's one of the larger holders. MCAP, a hedge fund out of Toronto, is a 10% reporting shareholder and have been with the company for quite some time and supportive of management. I think with the entry into the GDXJ earlier this year, we are starting to see more institutional equity holders coming into the company. Certainly our marketing efforts these days have started to attract a few more. So still fairly widely held though.
So as we close out this interview, I think it's really interesting how we've seen the market change, gold price going down, what that does, what gold companies need to be doing, and then now in a rising gold environment. Give us an idea on what that will mean for a company such as Gran Colombia. Do you guys start going after more expensive gold because now it's profitable? And what can investors in the resource space expect maybe over the next 2 to 5 years in this environment?
Well, I think, certainly our cutoff grades for what we're mining were driven by much lower gold prices. We haven't yet adapted our mine plans to reflect a longer term gold price, at the levels we're currently seeing. And if that happens, we've got, a significant increase in resources and reserves available for us to start mining, and it'll be economic, which will be great for us. But I also think that, what we're starting to see in the industry, you see more and more announcement lately, is the consolidation of the industry will start to take a little bit more shape as this goes out. You've certainly got the large players looking to replace reserves. They're going to look at the quality mid-tier and so on. So I think over time, as we continue to build a very successful portfolio, maybe there's an opportunity that we'll find to, leverage ourselves into a larger organization to create that value for shareholders. But we're sitting in a really nice spot right now, and we're trying to determine where we end up going. Do we end up becoming one of those consolidators, or do we end up being consolidated into something? But this is the thing that's going to happen, I think, going forward with the industry.